Okay, update on the markets here on May 13th. Oh, I just realized it's Friday the 13th. So this is right before the market opens. We just made a new low on the weekly and daily chart for the major indexes just yesterday. And what I say is the futures are setting up for a swing low. So I should say this, the futures already have a swing low on the board as of now. So we'll have to see if the indexes can close there. So we'll start with IWM, that's the small cap index, Russell 2000. And so we'll start with the daily chart. We are very, very deep in the daily cycle. So we're in the timing band. I mean, we have been in the timing band for a daily cycle low. So yesterday might have been our daily cycle low at day 54. And you can see we're going to open here at around 175, essentially. So that would give us a swing low, making this, because we go above this high, which is, 174.34. We'll have to see if we could hold that into the close because the market, this was a little 3-day rally that got stamped out. Even if this is a daily cycle low, we would expect the high to come early, like maybe day 9, like this, right? So you see, we got this swing low, day 38. That was our daily cycle low once we went above that high with this candle here. And then this looked like we were going to roll over completely, but we even recovered, made a marginally higher high than this. And then we just kind of meandered here, and then finally this dump. And so we'll look at the higher time frames. It doesn't look very rosy. So on the weekly, this is what you really want to be paying attention to. We topped out on week 5, and this is now week 10, right? Wait, 6, 7, 8, 9, 10. Actually, week 11. Weekly cycles tend to be, in the 20 to 25 week range. So we're still pretty early. And it's not like some kind of mystical thing that it needs, like there's such a specific time. It's just thinking about the way a trend works, right? We just made a massive lower low on the weekly chart. You see these lows, they all got taken out, right? We just cascaded lower. So your next move is going to be a lower high. That's the probability suggests that that's going to be your next move, right? So we get a bounce, probably even a weekly swing low. Maybe we get up to like here, right? We get back to around the 200 area, right? And then we make another low. And then we make another higher low or lower high and so forth. Like that's the kind of action you would expect. So at some point, you're at the point where you would expect there's going to be a bounce to make that lower high, right? So we'll have to see. And I'm not saying we're going to plummet into the abyss necessarily, but we have more wood to chop. The other thing to keep in mind, I've been pointing out this gap. So this is a gap on the weekly chart because the gap happened on a Monday, right? And so Monday starts the week, and so this is the gap from 2020 when the vaccine news was announced. That was the week of November 9th. I still remember that, right? So that's the weekly chart. This is, thinking about multi-time frame analysis, right? This is the same level on the daily. I've been talking about this, that is an unfilled gap from November 2020 that is going to get filled, that is likely to get filled. And so it's not a coincidence that we stopped right above the gap, right? Like literally right above the gap. Now, I don't think we're out of the woods. Again, to reiterate, we probably come up, maybe make a lower high, right? Who knows? Maybe we don't even get past 193. I was saying 199, but we'll see, right? We get a few days up, and then I think we make another lower low. So we're going to be watching that very closely. And the monthly, still incredibly bearish, and really important to call out for IWM. We have a yearly swing high on the board. Since as we stay below the low from last year, which was 190.94, that becomes a yearly swing high. And so actually, as you're thinking about that, you might expect that level to be potentially resistance on the way back up for, if we are setting up for a multi-day rally, that could easily be, a good target to take profits, be cautious where we might expect a swing high on a lower time frame, because this is really bad. This is the sign of a potential larger top. Doesn't mean it is a larger top, but it's something to be very cautious about. And so we'll move over to SPX. the sort of the one that's kind of driving the bus. And so that is on day 54 as well. Again, same story, likely to at least open as a swing low. We'll see if we get an actual swing low. Like if we can kind of hold it, especially this being a Friday, this would set up for potential bullish continuation into next week. But again, I would expect, you know, I would look at this as an example, right? We made a high on day 7, and then this is a similar chart to IWM, by the way, right? Like this was a daily cycle. IWM's daily cycle ended on day 38. This ended on day 34. But we came up, made this high on day 7. We made a higher low, so this looked promising. Like, okay, well, this is what you would expect, right? But then we could not make a higher high. Instead, this is what people call a double top. And then we made a lower low below this low. Then we made a lower high, and then we made another sort of major low, daily cycle low. It was pretty short, and then we rallied actually for 23 days. I don't suspect we get that much of a rally. I mean, look at these subsequent little rallies, right? This looked really positive in real time. This was a big green. This was a green candle at one point. We had made a higher high. You got this little choppy mess. So I'm thinking maybe in the 7, maybe 10-day range. We'll have to see. Similar to IWM, weekly picture is grim. Week 11. These things generally last closer to 25 weeks. And the cycle before this one was relatively short. It was just 20 weeks, right? The one before that was very long at 31. So you had a 31-week cycle followed by a 20-week cycle, and now we're on week 11 of this new cycle. So you can do the math, right? We're probably not going to get a low for a couple of months. I keep saying likely call it, week of July 11th. We'll have to see how that kind of pans out. Call it July, mid-July. And the monthly chart, similar kind of story. In this case, S&P topped out in January, whereas IWM and QQQ topped out in November. S&P still remains above, and I'll take these drawings off so it's easier to see. We'll zoom in here. Again, this is the annual chart. Every year is a year of price action. I love being able to see this chart. I mean, look at this. This is your top in 1929, your crash. This gives you the biggest picture view you can get, right? Look at this. This is look like we're a hair away from making a new low. Oh, right. Once I add those drawings, sorry, I'll hide that. So, right, like the low from last year is, just for reference, 36.6271. I have a hard time imagining we don't get there before we make that, like maybe that's the area in which we get that low in the summer. Obviously, the COVID low was much lower if we're gonna come all the way down here, but I suspect we're gonna get below this low here, make a swing high for the year, and maybe we get a recovery and it's not a drawn out thing. Like look at this swing high from the 2000 crash. Like this is the way you understand price action at these highest of time frames, right? We had this swing high and then just cascaded lower. Swing high, 2 years of this was your global financial crisis. You had this swing high from back in the 70s. People talk about this bear market. So we could be setting up for a couple of years of pain, but that doesn't have to be the case, right? This could end up making a low below this low, and then we get a nice big wick, something like this, right? At one point, this candle was really ominous because it opened here, and then you were all red down here. It looked like you were just gonna, I mean, obviously there was people were calling doomsday. In the end, you really just kind of made a marginal low, versus the 2000 crash. So we'll have to see, but that 36.61 level is an important one to watch. And finally, QQQ. So the NASDAQ 100, looking worse than the S&P, more like the more like IWM. So day 42, not as deep in the daily cycle, but also looks like we're going to get a daily cycle low here as well. Again, same drill. And this one topped out on day 7, just like the S&P. Didn't even get a double top. This was just a lower high, and then just kind of cascaded. And then this daily cycle that's about to end actually topped out on day 11. So that gives you a reference. I don't imagine we get a rally for more than 11 days, and that's probably really generous. It's probably going to be more like, in the 7, maybe even 5 to 7 day range. So this may be setting up the opportunity to short, right? Maybe we get back to 317 and then a collapse down. And for the Qs, we have made a new low on the yearly. That is important, right? Like we've made a new low below that 297.45 level. Um, and we're back up. Well, we're inching back to that level to try to get back to that level, but obviously, you know, this is not a good sign. And so it'll be important to see how we close today, right? To hopefully, create more of a lower wick on this weekly candle. And then next week, maybe we get a swing, weekly, like that could be your sort of proximate near term target. If we're going to get any bullishness, maybe we get a weekly swing low. So that would mean next week we would need to trade above 309. I'd say once you get into that area, you'd expect to be like some resistance. Maybe you even get to this candle here, which topped out at that topped out at 330. I don't know, that would be a hell of a rally in a sort of bearish trend, but I guess we'll have to see.